Hi, my name is Wendy Pine. I'm a financial advisor with Protegro at protegro.com. We're a holistic financial services firm. Today, I am excited to talk about one of the 4 basic annuities. And to start it off, I've got a question for you. You're in a race. It's between you and your money. Who do you want to have win? Most people say that they want their money to win, but how do you plan for that? If you remember my last few videos, I talked about how an annuity is an insurance product that can help people solve the problem of living longer than expected while they're in retirement. When you have a longer lifetime than planned, a whole host of issues such as healthcare costs, inflation, and market volatility all need to be addressed. An annuity can be a part of the solution for those that want to know that when they're in their retirement years, they've got a plan and are better able to take control of those situations if and when they come up. With that being said, there are 4 basic types of annuities, and today I'm going to talk about the simplest one. This one's called the Single Premium Immediate Annuity, which is also known as a SPIA. A lot of people tell me that their grandparent or parent had this particular type of annuity when they were in retirement. It is an insurance contract where an individual pays a lump sum to the insurance company, and in return, the insurance company guarantees to make income payments to the individual immediately or within the first 12 months. This income is paid out over a specified period of years, like maybe 15 years, or for the duration of that person's life, depending on what the person has chosen. The positives to this type of contract are that the individual has a contractually guaranteed cash flow that could last for their lifetime, no matter how long they live, even if that lump sum that they put into the policy has been reduced to 0. The negatives to this type of plan are that the individual loses control of the lump sum once it goes into the contract. If they have what is called a life-only annuity contract and they pass away after receiving their first income payment, the insurance company keeps the remaining lump sum. And as you can imagine, there were some people that weren't happy with that type of contract. As a result, there are contracts that allow the individual to receive lifetime income, but it does guarantee a period of time that the insurance company will continue to pay out, regardless if the annuitant passed away during that time period. An example of this would be a lifetime annuity with 10 years certain. That way, if the person passes away during the first 10 years, the beneficiary can now get that income that they were supposed to be receiving for 10 years or whatever that remaining amount is for that remaining amount of time period. So why would someone consider purchasing a single premium immediate annuity? Well, they are certainly not as popular as they used to be, but they can still have a place in people's portfolio. They can make retirement planning easier, and they may even allow for a higher withdrawal rate than what you could safely take out of stocks, bonds, and mutual funds over the course of a long retirement. Individuals that have other sources of retirement funds may choose to purchase a SPIA for the guarantee and higher payout to fill in the gap of what other sources of income could provide. Additionally, they may have already determined and planned out what monies are going to be passed down to their heirs and aren't necessarily bothered with the idea that their loved ones aren't going to get this particular pile of money. Now, drawbacks, always have drawbacks. Drawbacks in this include the loss of control of your money once it's placed in the contract and lack of liquidity. There is a financial questionnaire to help make sure that this type of vehicle is appropriate for your financial situation and it's suitable, particularly in regards to the financial liquidity. Meaning in an emergency and for daily living, do you have other money available in the bank, a CD, a retirement account, or brokerage account that you can access quickly and with little to no cost? Any distributions prior to age 59 and a half may be subject to a premature distribution penalty by the IRS. Lastly, annuity contracts can seem complex in their design and in some of the terminology that's used. However, with the help of a financial services professional and by asking the right questions, you can easily discover the benefits and drawbacks when it comes to an annuity contract. I'd strongly recommend people to work with an advisor who has experience in designing these plans. And in particular, if you are ready to retire, talk to someone who can show you how to fill the income gaps with bumps in pay as inflation increases over time. If you'd like an unbiased quote without any sales pressure, or you'd like help designing your policy, please shoot me an email at info@protegro.com. If you'd like my free guide to the 3 keys to successful retirement planning, email us, info@protegro.com. If you like this and you'd like to see other videos, please hit subscribe below. If you go to my website at protegro.com, I have other nifty tools on there, as well as other videos and other information. So protegro.com is where that is. If you have any other ideas for future videos, please email me at info@protegro.com. I look forward to talking to you again. I hope you have a great rest of your day. And until next time, take care.